Hedgeless Horseman here. It's May the 30th, 2023. I didn't follow the markets that much today because, again, like, who cares? I absolutely make no selling or buy decision. I don't remember when I actually bought or sold a single junior based on where I think the paper prices or anything really is going tomorrow or in the short term. But yeah, I guess, I don't know, gold up a bit perhaps, silver even, copper somewhere. That's noise. That's for the ambulance chasers. If you get the fundamentals right on a particular stock and it's cheap right now, getting the fundamentals right, but it doesn't mean you need to, every story doesn't need to turn out right, because you could have a perfectly good buy, a smart buy. That doesn't mean it's gonna look like a smart buy. Just means that, hey, you put yourself in a position where if things go well, you're gonna make more than you really should, because, you know, the company was probably mispriced. Anyway, what's more interesting is this. I saw on Twitter, TSXV index falls below 50, 100 and 200 day moving averages. I mean, that's like, you know, for traders and such, is like, I mean, if you look at, I don't know, here we have I guess it's, you know, a death cross, for example, and drop below indices, moving averages, I mean, then up a bit and down. It's like, who cares? It's dirt cheap. It's like those people who are waiting for the quote bottom to be in. It's like that. If there's anything I've learned after surviving and thriving thanks to being always buying low, is that shorts look absolutely horrible at the absolute low. It's just what it is. The last day of the downtrend is obviously the day the short looks the worst. It's like, and like Stock Shaman here says, yesterday was the lowest volume ever on the TSXV going back to 1996. That includes the days when the market had half a day sessions. This is just absolutely unbelievable. Then you should start to understand, it's like, how generationally irrationally cheap, you know, the junior miners are. It's absolutely crazy. It's like there's pretty much never been less interest in a critical and cyclical sector since 1996. Well, I mean, at least in, you know, decades. This of course just, you know, one day, but it's like record low volume. It's just unbelievable. Imagine what a contrarian you are by default. Because there's, you know, some stocks, for example, today I saw some that's like, I don't know, maybe not a single share traded hands, and the thing is, like, you know, they're cheap. But nobody on the planet Earth that had access to internet and has a brokerage account, for example, agreed with that statement this very day, or did not have a single extra penny, and nobody found the stock. It is just absolutely incredible how much of a contrarian it is today to literally be doing daylight robbery. That's how cheap some of these juniors are. It's like I recently started doing a spreadsheet. Just, I mean, I know they're cheap, but it's like to get a sense of especially for the more high risk, high reward ones, where you kind of just have to calculate some kind of expected value. Because I mean, there's obviously stuff like, Magna and trying to come up with some other good de-risked juniors, where it's like, I mean, you're not even taking any risk really. I mean, there's nothing really needs to happen for you to have, maybe multi-bagger upside at face value, because it's not like Magna needs to prove up that they have 600 million tons of nickel or whatever it is. I don't actually remember, but it's like they have 2 deposits, they have 2 semi-permitted mines, they have 2 nickel, copper, platinum group metals resources. They have that on the books. They don't need to have any kind of real success other than what's already been done, and that's still cheap. So that's why, those are the ones I tend to have a lot higher exposure to, because you don't really need an unanswered question at the moment to even have that go higher. Whereas if you're in a grassroots exploration pre-discovery play, obviously they don't even have anything of substance, and there's a low chance that they will even have it. Anyway, but think about that. If you're a buyer in juniors, you might never have been more lonely. Think of it like, if you're in a neighborhood, you have 99 neighbors. 99 are either unaware or don't realize that you should be buying low, and or don't realize how cheap these juniors are. You're the only person in your entire neighborhood that might have the common sense, and it's like, you just look at the presentations like, okay, this is what they have, and then you look what it's selling for, what you can buy those assets for. You're like, oh my god, what the hell happened here? I mean, we're talking about critical minerals, and the problem with there's not enough discoveries, and peak gold and all of that. It's like the gold sector has been flat in terms of production for like 6 years, and they're eating up their future. The larger miners, you see that all the majors, etc., in starting to invest in juniors, etc., but nobody actually buys the hard assets in the ground. I can't tell you how this makes me all tingly. It's like, man, it's like you're literally going against you've never gone against herd more than you're doing right now. And it's weird because to me, I don't think the juniors have ever been better buys. It's like, I don't even care really what commodity it is. Like, the copper juniors are super cheap. It's like, yeah, sure, copper is off, but the long-term trend for copper looks extremely good. And it's like, I watched a presentation by Chen Lin the other day from Metals Investor Forum, where he showed, it's like, there's not too much global inventory left of copper. It's been declining every single year over the last several years. It's just incredible. The value of future supplies going up every year. And still, you are by default one of the biggest contrarians in decades, just from realizing that, and actually, basically robbing Mr. Market blind right now. It's absolutely crazy. And of course, again, it's like, alarm bells. It's like, oh, moving averages, broke down moving averages. It's like, when do you ever expect a bottom or even a low not to be below moving averages? But of course, the flip side is, yes, you can buy one of those. Now, I won't buy a P3 company. I'm going to wait until the trend is up and it's trading at P7. That's when I'll get in. It's like, that's the dumbest thing personally I ever heard. But that's what typically a lot of people do. They want the trend. They want the recent past to make them comfortable to believe that the recent past suggests, okay, if it's gone up for 3 months, I think it's going to go up for the next 3 months. So that's when they're okay to buy. And maybe they miss, I mean, if you go from a low in this sector, like always, from the absolute low here, it's like we're talking 651. If you wait for when you think the trend is up, you might get half that. And then you again have the problem of fake breakout trend reversals. You know, who knows? I mean, this might have been the bottom, but like if this wasn't the bottom and we're going back there, or it's like, I mean, there's always a chance to even go lower. I mean, especially in an individual stock, but like, then this might also be a fake trend reversal. I think it sounds great in theory to like, yeah, now I'm just going to buy when the trend is up. But in practice, you tend to buy high and you miss a lot of the absolute. I mean, if you can buy a bunch of projects for free down here or down here, why on earth would you want to wait until you paid for the assets to actually buy them? I mean, it's just imagine somebody offers you a car on the street, and it's like selling for, well, yeah, let's say a decent car, well, a good car, and they're like, here, you can have it for $1,000, and you're like, no, it's gone from whatever to $1,000. It might go to $500. I mean, trend following and etc. makes people absolutely retarded. It's like, who cares if you could have gotten it at $500? $1,000 for a good car is an absolute daylight robbery. You're going to be extremely happy when the car market gets back into shape, let's say, and it's selling for who knows, 50,000. It's just unbelievable. It's like, but there will be that's how I see people who like sell low, because it can always go lower, which it can, and that's also why they always buy the highs, because it can always go higher, which it also can. So they end up never buying low and they end up buying high, because they always project the trend. Whereas, like, what risk am I taking? I buy a car for $1,000, worth maybe $50,000, or probably at least going to be worth $10,000 one day. Who cares if it actually ends up dropping to $500 and you bought it at $1,000? You still made a absolute steal, and you can sell that car one day for $1,000. If you don't buy it for $1,000 because, hey, it can always go lower, and it doesn't go lower, congratulations, numbnuts. You missed a 90% discount from sheer greed. Anyway, and it's like, again, with shorts, etc. I mean, how good did this breakdown look? It's like, let's say, a support lines from, well, at least from 2008, so like, and way back here, it broke that within like, how long is this? Like, well, I guess 1 week of downside, and then the bottom was in. And this closed higher than any of these resistances. Day of the top. So this was a major, quote, breakout to the upside. Multi-year all-time high breakout. That was literally the worst time in this entire short that you could have bought. And this breakdown here from a multi-year low was literally the worst time you could ever have sold. Until this time. And you can see the same thing here. Okay. Went to this level, bounced, broke down. It's like, yeah, a week of downside, and that was the best buy since 2004. Well, lowest level, I should say, since 2004. Who the hell cares if they are nosebleed expensive here, and it's like, oh, a breakup, I'm still gonna plow into Bear Creek Mining because it's making a breakout. I mean, it's the same way. It's like, yeah, Tesla went from whatever 800 billion to 1 trillion. It's like, okay, let's say it broke out. It can always go higher. It's like, again, congratulations, numbnuts. You were paid by maybe 80%. You have no margin of safety. That is a stock that should go down and stay down. The high quality juniors right now, they have a chronic risk to the upside. They should go up and stay up. It's just that valuations don't. Nobody's talking really about valuations except Rick Rule, etc. up here. And nobody's talking about valuations, etc. down here except for Rick Rule, etc. And Ross Beaties and whatever. This is where, like, I made a tweet today. I don't remember the last time I saw someone say they sold a junior or sold juniors or got out of the junior sector or want to get out of the junior sector and made any reference at all to what they actually were buying or selling. I haven't not seen a single tweet, and I don't remember how long, where somebody literally said, I'm selling this junior or juniors because I think the price of them right now is too much. They are overvalued. I am making a mistake by holding them. Haven't seen one. So you know that they don't even look at that. And that's the beauty of this sector. That's why it's so easy, because people lose their minds at lows and highs. And maybe the fair values around here. So the lower it goes from here, the less rationality goes out the window, and the higher it goes, the more overvalued it gets, the more irrational the buyers become. So again, I don't care about charts or moving averages or anything like that. It's supposed to look crap. It's never gonna look worse than near the lows. And the actual day of the low it's never gonna look worse. Multi-year breakdown, 8-year bottom, multi-year breakout, all-time high top. Minus 96%. Plus 660%. The only risk from here in high quality juniors, really, and I'm talking about the average junior here, it's short-term paper losses. That's your risk. That juniors might get even cheaper or stay cheaper for a while longer. That's your only risk. That's the worst case scenario on average. That they for a while can get cheaper. Imagine if you could play hands in poker where worst case scenario you lost money in a hand for a while, then you made money from the same hand. Of course you would play every single hand that had those kind of quote risk. It's just absolutely crazy. I'm gonna go back. Well, first of all, I'm gonna recap. This is one of my earliest spreadsheets. I think I did in 2015-16. I didn't know much about miners. I was only in beta, and it's like some of these I don't know if Great Panther is left around. Levon Resources. That's actually Discovery Silver today. I think that's trading at $414 million with management changes, name changes, etc. That was actually Levon Resources back in the day. I remember owning Arizona Mining. You know that one that kept on growing and got sold for 1.6 billion. Unfortunately, I sold that too soon. The market cap would have a 10 bagged. Unfortunate, but it happens. Klondike's Mine got acquired. Teranga, I think they got acquired. Endeavor, I remember, became like a multi-bagger. I remember, well, many of these became multi-baggers after the bottom. I know, funny, it's like, I remember making, I think, a multi-bagger Navino. I made quite a bit of money, if I remember correctly, in Silver Standard. Yeah, they had an enormous amount of cash. I don't remember how much, but here it says they had like 1 billion in cash. I'm not 100% sure that was actually correct, but it's like, I remember it's like ridiculously cheap. I remember buying Silver Standard, which is now SSR Mining, when that broke down. I think I've talked about this before. I think it's like gold and silver went down, I think only less than 1% on the time around around this time here. And for some reason, of course that's momentum traders and stuff like that. Excuse me. Miners just got sold off. I remember, I think SSR Mining, Silver Standard back then, sold off 10% that very day. No reason at all, really. Insanely cashed up, one of the most cashed up juniors around. And gold and silver were barely down, so even if you care so much about the paper melts, it made no sense. But that was a fund, I guess, being liquidated, or momentum traders, or something that triggered stop losses. It was just unreal. I bought as much as I could. I remember it's like I think I had to sell some other stocks because that one is like, oh my god, this is the cheapest one. I know it just went down 10%. I got so greedy. I remember that. I literally remember that to this day. I just could not believe my eyes that somebody's willing to sell Silver Standard 10% cheaper on a day where it's like the metals had barely moved. Yeah, it's crazy what you see. I mean, I made a ton in. Well, this I guess was done later, but I remember I had a 500% return in Bear Creek, I think, because I picked that up around this level here. Kirkland Lake, well, Newmarket. It was one of the first stocks I bought, actually. Now, of course, I unfortunately didn't hold it. I did not get I don't know how many baggers that would be. You know, Kirkland Lake, obviously the best performing stock on the TSX for a time there around 2019. Sold that too early as well. But it's just funny looking back. It's like, this was one of the biggest successes. This was one of the biggest successes. I just bought them because they were cheap. And this one here is, yeah, trading for like 40 times the market cap it did back then. More stuff has happened, obviously. But if I just held these, I mean, it's just crazy. Literally, if I just held everything that is in here, you know, equal sizing, I would probably have done well, because some would become 10 plus baggers. And then some would obviously get back. Anyway, so I spent and I'm gonna, you know, do more on this spreadsheet, but I just, you know, thought it would be fun because there's so many good plays. I mean, there's so much stuff that's cheap. I found, like, well, I shouldn't say found, but it's like I just looked at another company that I own some shares in that I own some shares in, and I just, you know, like, oh, I wonder what that stock is doing. It's like, it's just absolutely crazy. It was actually, yeah, Redpine. I remember it's like I picked up some at like 21 cents and thought I was stealing. It's like 21,000 shares only traded. It's just remarkable. I mean, this is one of the more advanced juniors out there, gold juniors in Canada. Share structure is not great, and there was a big liquidity event. It was like they keep plugging away. They recently closed 7.745 million private placement. Let's say they have 8 million in the bank. They have an enterprise value of 12.5 million. They must have spent, it must probably, I mean, the amount of drilling that's been done on the property, probably worth like 60 million or something. 60 million in sunk cost. You can buy the entire project right now for 12.5 million. I mean, it kind of shows there's like, this sector absolutely is, I mean, people don't know really what they're doing. I'm not saying this is the best union in the world, but it's like, who in the hell would be dumb enough to even go look for gold if the market right now was correct? It's like, yeah, okay, plow down 60 million, let's say, in drilling costs, and you actually have success. Your payday, question mark? Well, your payday is that what you drilled up over years for 60 million, you'll get a 12.5 million reward for that. Imagine how insane that is. And they even have, I mean, I'm pretty sure that, like, isn't Alamos Gold is in this, I think. I don't know if it says Alamos Gold here, but I'm pretty sure that Alamos. Maybe not. Well, I know they're in, but I'm not. Anyway, I just found that it's like, oh my god, it's like it's hard to even go look at stocks right now, juniors, because I mean, you can barely look at a decent or above junior miner and not come, go away with the conclusions like this is absolutely insane. Anyway, I started doing some just estimations of like what's the risk-adjusted value, fair value, and of course I'm not. Mother Nature know what's there. Okay. In the ground with these exploration plays. We do not, and nobody on earth knows the exact chance of success. And of course there can be something there and you might miss it, and you can drill right past it. Might take 15 holes before you actually find it, and it's actually there, but again, you don't find it immediately and stuff like that. I mean, nobody really knows, but it's still fun to just see how, in my opinion, ridiculous some of the bets are. I mean, take Juggernaut, for example, the microcap or 5.7 million. I think I don't know if that's including the recent race. I participated in that race. So I think, I don't remember if they raised. Oh, okay, 3 million. Oh, okay, market cap is up there. So like 5 million. 5 million enterprise value. Okay, for 5 million. So what kind of success is priced in? I mean, I just guesstimated like, hey, maybe they have a 3% chance of finding a $1 billion dollar porphyry at, was it Empire? Something like that. Maybe that's a lot, maybe that's 2% or 1%. That's still like 120 or 30 million. And the enterprise value right now is 5. And they have other properties, obviously, like I think they're going to be testing 3 targets actually. So if there's a 3% chance they'll find something worth like 300 million at Midas, that's risk-adjusted value, fair value today of 9 million. And combined these become 39, and then it's like, okay, 690% upside to what the risk-adjusted value might be if you think there's a 3% chance of success. I mean, obviously that doesn't sound like much in that case, because then there's a 94% chance of total failure. Is that correct? Hey, who knows? Maybe, but that's the thing. It's like even if there's a 90% chance of failure, this can still be very cheap. I mean, if these assumptions are, you know, somewhat fairly accurate, it's like I wouldn't call it aggressive to say, yeah, give them a 3% chance. In that case, if there's a 3% chance, it's like, and of course both scenarios might happen, but it's like in that case the risk-adjusted value for both for 2 of their 3 targets is like today 39 versus 5.8 or whatever the enterprise value was. Even if you use the actual market cap, that's like 8. That's like, you know, multiple still to the upside, undervalued by, you know, a wide margin. But that's obviously not something you would go all in, because if there's a 90% chance of failure, you have to diversify away that risk. You at least have to own like 10 similar stories. And if there's a 90% chance of failure, you probably will get, you know, on average, you will have at least one success. And if those successes, given that it's, yeah, market cap of 8 million, if that becomes something, I mean, a 10-bagger, which would pay for everything else, is only 80 million. If any, you know, if you have stores this cheap and they make a legit discovery, that's, you know, when the sentiment turns around and that, I mean, 500 million wouldn't be out of the question if they find something really significant. I mean, 500 million will not even come close. So that would pay for the 9 others going to zero and then some. Anyway, Condor, extremely interesting case. I just, well, I guess, yeah, okay. So it's like, yeah, Condor, very promising target. The immediate target looks to have like, who knows, 5 to 10 million ounce potential. It's like, obviously depending on grade, etc. I mean, you can make some calculations that go above that, but it's like, let's say 5 to 10 million ounces theoretical potential, given what we know is like the geophysics target and the channel samples where it's been outcropping. Okay, what would that kind of deposit be worth? You know, good grade, multi-million ounce system, near surface, open pitable. I would assume it's like easily 1 billion. Easily 1 billion. And of course, if you add on higher sentiment environment, higher gold price, obviously 1 billion can be overshot. But it's like if we're talking steady state intrinsic value, so let's say 1 billion. Okay, if we think there's a 20% chance, given how that target is also, given that they might know if there is such a target on the first drill campaign, we will get the immediate answer. Because like for Juggernaut, for example, unless they can't really, you know, prove up the whole goddamn thing in either target. So I mean, the best case scenario, especially if they're, you know, drilling a vein target, that's like best case scenario, you hit a vein, but that's like, yeah, but that's far away from a mine. Whereas in Condor's case, you could actually, it's like one drill campaign and you might see, it's like, yeah, there's a mine here. There's a multi-million ounce mine here. So it's kind of different that, yes, in theory, of course, if Juggernaut hits something that later becomes whatever, but there's got to be a lot of answers before that. First you have to hit something, then that has to grow. So you have to have continuously asked questions and positive answers, and then at some point we will know that if, you know, blue sky materializes, etc. So that would be more of a steady steps to the upside, you know, like Great Bear and most actual discovery stories. Whereas Condors, like they might have one drill campaign and you might immediately know. And again, it's like if we just assume there's a 20% chance that they have a 5 to, I don't know, 10 million ounce deposit there worth 1 billion. If there's a 20% chance of that, then the risk-adjusted value today is 200 million and the market cap is at 29. In that case, it's undervalued by 685%. And that's obviously not Blue Sky, because Blue Sky would be much higher, because it's 685% to 200. And if, Blue Sky is like 1 billion, you have to multiply this by 5. So, theoretically, like, yeah, okay, a 30 bagger. But still, if we assume our corrections are correct, that's still an 80% chance of failure. Of course, it's like with Juggernaut, for example, if they miss at one target, at these valuations, like, who cares? I mean, nothing's priced in, and they have targets left. So it's like, that can't kill that story. It's like Condor. They have a bunch of other projects as well, but we haven't heard much about it. It's a kind of a slow moving story. But it's not like, even with an 80% chance of failure, if we assume that for Pucamayo to be, I would assume, conservative, then in that case, if they completely miss, there's nothing of value there really. 50% downside or something. Okay, so -50 for whatever they find, and it's same goes for Juggernaut and all this. I mean, you can't kill this. If Condor was trading at 200 million right now, I mean, the risk reward completely changes. Let's say Blue Sky is 1 billion, so you have 400% upside. That's your upside in case it works out. And let's assume we don't know anything more than we know now, so there's a 20% chance of that happening. But there's an 80% chance of it going from, let's say, fair value is 20 million without Pucamayo. If Pucamayo was absolutely total dusters, I mean, I think their portfolio is undervalued, but still, let's say it's 20 million. You have 200 down to 20 million in downside, and there's an 80% chance of that happening. Versus now, where there's like, let's say, 50% downside, but in the case that it's successful, you don't get a 400% return, like going from 200 to 1 billion. You're going from 30 million to 1 billion. I mean, the risk reward, these bets are, these kind of high risk, high reward bets are absolutely insanely different at sentiment lows than at sentiment highs. Garibaldi Resources during this period was valued at 500 million before a single drill hole. That is if you have not seen this sector in good sentiment, in a good sentiment environment, you have no idea how different everything feels. Everybody is thinking about, well, they're looking for every single excuse to buy something because of greed. It's like they're looking for every single excuse to buy something. If there's a shot, something can work, they will see that as a reason to buy. Right now, everybody's so stupid because everybody's is looking for a reason to sell. Some dude is gonna look at, like, oh, it fell below, moving averages, so I should sell. Or here, it's like, it broke down a resistance line. It's like, even if everything is given away for free, even if you have juniors with legit tier 1 potential exploration targets, maybe they're selling for 5 million down here. It's just absolutely insane. It's like, if the chance of success is like 10%, I mean, it should be valued at 100 million, not 5 million. So it's like 20x just to get back to fair value. That's how absolutely insane this sector gets when everybody's looking for a reason to sell. As soon as there's like an orange flag, or there's a I don't know, a full moon, or there's I don't know. They went to some sage who said, hey, it might rain tomorrow. I mean, everybody's looking for a reason to sell these juniors. There's never enough reasons to sell when you don't even need a good reason to buy. It's just absolutely crazy the way that works. And it's like, believe me, I've seen this. I saw it here, I saw it here, I saw it here, I saw it here. I'm seeing it again. I've seen this sector during lows and highs. I've never seen it at a mania type high, but total depression. Yeah, I've seen it. I know how it works. Things that people are scared to do now, like people, let's say you're selling RPX, is like you justify it by, well, this isn't the best deposit perhaps. There's no guarantee that this will work. If the sector turned around tomorrow, gold price went up and these juniors went up 100, 200%, everybody's thinking would change to all of a sudden, I knew it, of course, I mean, they have gold, this could still be a mine. That's how it's going to change. Price action leads narrative, leads emotions. If it goes down, they're starting to believe the crap that the marginal investor is selling, that, for example, red pine has no chance in hell of becoming a mine. Or having a mine. Because that is what the market is saying right now, given this absurd price. You have to call bullshit. It's like the opposite during the highs, when it's like every single project is pricing in, hey, this is going to be a tier 2, tier 3 mine. Sometimes with even almost, without a single drill hole. You have to call bullshit. It's like there's no evidence, there's no firm evidence that that's even going to be any kind of mine. But that won't stop people from buying, because they're looking for excuses to buy. They're thinking of how much money they can make. Now they're thinking about how much money they can lose. So again, if a black cat crosses the street, they're gonna sell. Here, if somebody says, hey, there's potential 20% upside here, or hey, okay, it's, this looks like quality X, but it could be a new Voisey's Bay. I mean, I remember, and everybody that was in Novo was like, during the peak of the, mania, or the conglomerate mania down in Pilbara, it's like, okay, now that was a bit special, because it's like, yeah, okay, extremely unusual situation. It's not, conventional at all. It's like, okay, what happens if you have a new, with Waterstrand type gold field that it can also be economically mined? I mean, there's no real scale bar for that kind of price. Compared to, like, yes, if this is a world-class mine, it might be 10 million ounces. But it's like, I mean, with Waterstrand was like, I don't know how many hundreds of millions of ounces, like 1/3 of all the gold produced or something like that. So it's a bit different, but still, it's like you can understand that, we were greedy. Anyway, it's like Fathom Nickel, for example. They haven't closed the placement, so I think the market cap, the market cap will be higher. I don't know exactly how high. Let's say 18 million or something. Still, I mean, I just put in a 5% chance of them finding a 1 billion type nickel system. In that case, obviously, the risk-adjusted value today is 50 million. In that case, like, yeah, okay. I guess this should actually be like, what is this? Let's say 300%, 370% undervalued. I mean, this is what has me extremely greedy right now. I wish, it's like, the only thing which is making me a bit impatient is the fact that I would love to buy an apartment in not the too distant future. Otherwise, it's like, if I didn't have a real need for money anytime soon, it's like, if you could freeze the current prices for like 6 months or go even lower. Oh my God! I mean, imagine if these estimations are fairly accurate. That would mean that in a diversified portfolio, if you just found undervalued case like this was average undervaluation, whatever that is. I mean, literally, it's like every single dollar you put in is gonna on average become like $5 sometime in the future. It's like printing money at these lows. It's just, it's like printing future money. this is when you have to be winning, meaning do the right thing. This is when you actually get paid. But what does it matter if we get up here and you didn't buy down here? I mean, like most people get in here. The whole idea is that to make the most, you're gonna capture a big move. So you have to sow here. You have to be. You're winning when you can buy low. You're automatically winning. When you can buy cheap, you're automatically winning, because almost no one can do that. There's not been fewer people that has been able to do that since like 1996. It's just incredible. Anyway, so again, it's like Fathom Nickel. It's like, do I know they're gonna have a 1 billion plus nickel discovery? Absolutely not. But we know that nickel deposits are sought after, especially in the West, especially in Canada, etc. We know there's been nickel deposits found and sold for like 1.5 billion and stuff like that. Is there a guarantee? Absolutely not. I mean, at the current market cap, it's like pricing in a well, now it's a bit higher, maybe a 2% chance that will be the case. So in theory, and this is undiluted, if there's like a 5% chance that Fathom Nickel actually has a $1 billion discovery on its tail, if you think there's a 5% chance of success, this would be very undervalued right now at face value. Headwater Gold, this is more unique. I mean, they have a bunch of targets. They have 11 projects. Spring Peak is a discovery, Katy is a discovery, or they have discovery holes. Midas is going to be drilled. They're going to drill Mahogany. They have a lot of other stuff. So I just did a risk adjusted. I don't remember what I did. I think I put like because Newcrest, to get them interested, I would expect like at least $500 million potential, and then you take whatever 10-20% chance of that. Spring Peak, given it's a discovery, a much more higher probability to actually be a $500 million deposit, simply because they know there's high grade there. They've already hit it. There is a system there. And then you discount that by the chance of success, and then you discount that by the fact that they would be free carried to PFS, but they would retain 25% plus NSRs. Anyway, I came up with a, in my opinion, conservative sum of the parts value of 68 million, and that would make Headwater very undervalued. And given how many targets they have, only one of these 11 projects they have is if 1 in 11 is a success, that's a company maker. Because in that case, even if they found something worth 500 million in this day and age, I mean a legit like Midas type mine discovery, I talked to someone who said that would be worth billions today, because it was so high grade. It was like an SK Creek type stuff. So let's be a bit let's be conservative and say 500 million minimum is what Newcrest would be interested in. If there's a 20% chance of that, 100 million times, and they would get to keep 25. So I would say that, and now the Headwater market cap 19.8, they have like 4 million cash. So enterprise value is like 15.8. So I think they're undervalued already, just, let's say based on Spring Peak. They get NSRs as well. So just absurdly cheap. And again, this is my conservative estimation that it should at least fair value for Headwater is 68 million. And that does not include the fact that it's so diversified to the upside, because they have so many cans to kick. I mean, Take Fathom Nickel. I mean, one could say they only have one target, so the chance of quote total failure is of course much greater. But they have 100% of that target so far. But it's like Headwater could miss. Spring Peak for whatever reason they don't find a high grade mine there, or they start to miss and there's nothing there really. Same goes for Katie. All of a sudden, well, I shouldn't say all of a sudden, but that doesn't pan out. But Midas pans out. Okay, then you have a company maker. Because even if there's a 500 million mine and 25% of 500 million is 125. So that's still a 5-bagger. And that's the lowest threshold, let's say, because it could easily be worth more than 500. If it's worth, if they find a high grade deposit worth $1 billion, which is not like obscene, I don't think, 250 million. In that case, that's like 22-bagger, etc. So when you combine how kind of diversified it is, and the fact that they have a big backer in Newcrest that's funding everything, so there's no dilution risk even, and they will have 5 to 6 drill rigs working this year, I think. When you combine that, the pace of potential discoveries, the amount they have to discoveries, the amount of projects they have, that they can go full bore because Newcrest is funding it, and they're free carry to PFS. I mean, all that comes back to, less dilution at face value, even though, yes, they would retain 25 in an NSR, but still, it's like if you have a 100% owned project like Great Bear, I mean, after the discovery, they raised a bunch of times. So it's not like, even if you started off with 100% from day one of the discovery, your shares will not have as much ownership of the company in the end. So you will by you don't effectively get 100% anyway. Maybe you get 75 or something, or I don't know, 70%. I mean, Osisko Mining, for example, they've drilled so much that's like, even when that's gone to like billion plus market cap, the share price has barely budged because they raised so much money. So like they, imagine if somebody funded all that at least, or funded it and they kept 25%. Maybe shareholders would actually be better off. Anyway, Altamira, I'm just assuming, I'm forgetting even about the copper projects here, but around the Maria Bonita target and within the Kajiro project, they have 600,000-700,000 ounces already near surface stuff, open pitable. They're working on that. If they find 1.3 million ounces at Maria Bonita, they have combined 2 million ounces of near surface, possibly heap leachable gold with low capex. I think they're gonna end up with more than that, because every single thing, especially Maria Bonita, is wide open in all directions. So it's like, but let's say 3 million ounces. They're starting with 600,000-700,000 ounces, but Maria Bonita and maybe some growth from the central target as well gets them to 3 million ounces, and that's like minimum $500 million in net present value in a heap leachable scenario. I mean, if the chance of success for that is, I don't remember what I used, but like 20% chance of success of finding at least $500 million mining complex. That's a risk-adjusted fair value today at face value without dilution of 100 million. No, what did I say? Yeah, 100 million. With only if you just assume a 20% chance of success, that would be 100 million. I guess I used 25. No, I used 25. I think that's more fair, but still. So 125. In that case, it's, I don't know if this is actually, has it gone that low? Yeah, maybe. Okay, I thought it was like 24, but still, it's like several hundreds of percent undervalued. It's pricing in a 4% chance of them having something worth 500 million at face value, anything at all, and they have copper targets as well. I mean, to me, that's absolutely ridiculous. 4% chance? Are you kidding me? It's like they've hit a gold porphyry wide open, starting its surface. Metallurgy appears to be very good. So, I mean, a heap leach project They have like gold in the saprolite, which could be like, you know, mined with like pick and shovel, I was gonna say. I think this is ridiculous. I mean, this should probably, yeah, be closer to 25%. In that case, it's like undervalued by 587%, even if you just assume a 25% chance of success. It's just crazy. It's pricing in like a 4% chance of success, aka no chance in hell. It's like, duh. And in Brazil, where it's like, yeah, okay, it's not the sexiest jurisdiction from a perception point of view, but from a mining standpoint, it's one of the best jurisdictions in the world. I mean, they're G Mining. They're actually, I think they got their permits now, etc. And Equinox has a bunch of mines in Brazil. So Brazil is probably one of the places where, if you had a low capex project, it's like would be a good mine, and not only it's like, yes, if you find a really good mine in Canada, it's going to be worth a lot, even though it might not be mined for decades. But maybe in Brazil, where it's like, yeah, you kind of need to get push it forward to threaten with monetization. Perfect. You know, possibly low capex, near surface, heap leachable open pit projects. That's the stuff you would dream about. Absolute ridiculous. Inflection. I did some small math on inflections. Like, they have a bunch of targets. I think they have 22 copper gold porphyries in total. They have the Caron Gold project as well. I haven't really included that, but still, okay. They're chasing. They have a bunch of ex-BHP people. They're getting. I hope the deal closes soon with Anglo Gold, so they can become very aggressive. We know that there's, like Alistair Waddell has stated, like they've only been explicitly looking for big features, geophysical features. The team has that, you know, let's say would have the signature of something that could be large. They're not chasing. They're just not. Hey, here we can have something. No, they're explicitly looking for big targets, because they're drilling undercover, so they would want big features. Duck Creek is the, let's say, most de-risked one, because they've hit bornite. They believe, given what they're seeing in the core there from just 5 drill holes, that they ought to be either above or at least very close to the, let's say, carapace of copper gold porphyry. I mean, that you have bornite. Bornite is a very high grade copper mineral, so you know there's been high grade copper mineralization slushing around down there. So they might be a few, you know, a deep hole away from making a discovery or something like that. So if we assume, I mean, there ought to be something there. They're finding copper. They're finding porphyry mineralization. All the signatures of a Macquarie Arc copper gold porphyry. So if we assume there's a 20% chance of Duck Creek being a discovery, maybe it should be like 30. I don't know, actually, or 40, 50. I have no idea. But it's like, and of course, it's like, given how, I mean, Cadia, for example, that's a mining complex, well, a cluster of porphyries. That's worth, I don't know, if you found another Cadia, that's like, I don't know, $10 billion or something. But I'm using 1 billion as like, yeah, I think North Parks also is probably worth, if you found another North Parks complex, probably worth a lot more than 1 billion today. And obviously, given the fundamental trend for like both gold and copper, expect that value to go up, because we're not finding enough stuff and we're running out of copper. Anyway, so if we just assume there's like, okay, 1 billion target on average, 20% chance of success, that's 200 million risk adjusted value net. Inflection would keep 25% funded PFS out of that. So net we say Duck Creek is worth 50 million. That's already more than twice the current market cap. If we assume a 20% chance of success of finding something, a copper gold mine that's gonna be worth 1 billion exactly. It could be more, obviously. Who knows? Could be I don't know. I mean, it's early days, but they have more targets around Duck Creek to test. But let's not go Cadia size. Let's go 1/10 of Cadia, or 1/10 of value, 1 billion, and then you add all the other targets. I mean, these are the other high priority targets: Trangi, Fairholm, Mara, Macquarie, Milamundi. Let's say they have a 5% chance of success to find copper, gold, porphyry, or porphyry is worth 1 billion. That's each one of those targets has, in that case, a risk-adjusted fair value today of 12.5 million. That's what they're worth to Inflection today, given these assumptions. In total, if we don't even count the 12 other targets and I just used 3% on the some other targets, let's say grassroots targets, let's even skip the other 12 targets, but only these 10 targets with Duck Creek and the 5 high priority targets. If we use these assumptions, Inflection Resources risk-adjusted fair value today could be 142 million, and that's excluding NSRs. And of course, everything of this is face value if they would reach a PFS, and then you actually have to build something. But still, I mean, they would be taken over anyway if you go that far. 142 million. The current price of Inflection is 19.3. If you think these are even optimistic, let's say we cut every chance of success here in half, or the price in half. We cut either the price, take that all the way down to 500, or take Duck Creek to 10, these to 2.5% chance of success, and these to only 1.5% chance of success. There's still a risk-adjusted conservative value of Inflection today at 71.25 million. And that's actually the one I used. That's still 369% upside to fair value. And then you also have, in my opinion, again, it's not like they have one target. They have up to 22 targets plus gold targets. So it's incredibly diversified to the upside. And there's a possibility that they don't make one discovery. They, theoretically can make 1 to like 22 discoveries for all we know. And they're funded probably for, when the deal closes, funded for the next couple of years. And I think they're also looking for, what comes after that. They're not sitting idle. Management owns 30%, around 30%. So yeah, even though it's like here, pre-discovery, yes. But for for a pre-discovery play, it's like 22 juniors in one. Even though, yes, the upside is capped in a sense, because Anglo can later choose 5 projects that they continue to earn in and would get 75% at the end of the day. But Anglo Gold also in that case makes sure that pretty much all of these get tested. So you have 22%, 22 cans to kick, and let's say you find at least $1 billion mine, they keep 25%. That's 250 million plus NSRs, which who knows what an NSR could be worth, but I don't know. Let's say 30 million. I'm totally guessing here, but that's what would one discovery could be worth, like 280 million, let's say, from $1 billion copper, gold, porphyry. That's obviously more than a 10-bagger, and obviously that's for one. If they make 2. That's 560, or they find 1, but it's a $2 billion type mine. mean, if they make 3, one, I mean, yeah, you can see. I mean, there's a possibility they make 0, but they can also make 1, 2, 3, 4, etc. Very, very exciting in my opinion. Tectonic, pretty straightforward, I would say. They're going big on the flat gold project. I'm participating in the placement. I just assumed, okay, $1 billion blue sky target. I mean, yes, we know that's like there are 4 kilometers of like gold in soil anomalies. I know somebody, I think it was the realist, or what his nickname is, in the chat. He just had done a crude calculation that based on the already the historic hits, that he's like, yeah, I can see I think around 3 million ounce potential at like 0.7 grams per ton. I don't know if 0.7 grams per ton will cut it. I mean, if it is a Fort Knox, which Quinton has talked about, if it's a Fort Knox type metallurgy, obviously 0.7 would work very well if it starts at surface, and who knows how large it could be. Like Quinton has said, I mean, Donlin Creek is in that neighborhood. That's like what is it, 20 or 40 million ounce deposit? I don't remember exactly, but worth several billions. I think Nova Gold, which has 50% of it, I think they, within the last 2 years, I think at one point it was valued at $4 billion. That's for 50% of Donlin Creek, $4 billion. I mean, the absolute blue sky would obviously be a Donlin Creek, which you owned 100% of. And perhaps with better metallurgy, will be at a lower grade. But still, it's like, okay, let's not get too carried away. I mean, again, what is the point of no-brainers? Why are these no-brainers to me, these ones I've discussed? It's because I don't even think I'm making, I think I'm making pretty conservative assumptions, and don't use really that high chance of success even. It's like, max, if it's a discovery, I've gone up to maybe 25, but in that case I kept the the blue sky scenario, not too high. It's like, I mean, for Headwaters or whatever I talked about, it's like, yeah, okay, 500 million blue sky. I mean, that's not $500 million, not blue sky for a high grade low sulfidation epithermal system. Anyway, so I don't think I'm getting carried away. That's the thing. It's like, for a no-brainer, you want it to be let's say a screaming buy, even if you use conservative estimations, because in that case there's probably no chance in hell you're making a mistake. And if it's that cheap, that means that if things go well, the reward could be a lot higher than it should, meaning that the market should never have priced these kinds of stories this low. Because nothing in terms of chance of success has changed, it's just that the price has gone down. Again, going back to, like Condor. If Condor was priced at 200 million, and that, let's say that was a fair value, that yes, there was indeed, nobody can know it, but let's pretend God told us that there's a 20% chance that this is worth, 1 billion. In that case, 200 million would be a fair bet, and the market would be, let's say, efficient at that point. That yes, okay, it's given the chance of success, etc. Yeah, 200 million. That's fair. But in this environment, none of these people are again taking any excuse they can to sell. Not to buy, to sell. And it doesn't matter to those people the fact that the chance of success has not changed. Chance of success might have gone up. The blue sky potential might have gone up in some of these juniors over the last couple of months, and still price went down. That means that the likelihood of blue sky or the potential of blue sky might have been going up, but the price has been going down. So the bets just get exponentially better. So again, it's like Tectonic. Like, do I know that they're gonna find something worth 1 billion? No, but it's like I don't know. Okay, they're diluting. So, but let's say there's 4% chance of that priced in. So if you think there's a 10% chance, then this should be already double the current market cap. If you think it's 15, or if you think that hey, it's 10% to find a $2 billion deposit, then it should be many multiples higher than where it is trading today. So I cannot come up with another conclusion than these valuations are giving the few buyers who are in this sector when prices are this low, absurd risk reward. The bets are, to me, you would never find bets like this in poker. Never ever. It's just crazy. But again, it's like Tectonic. It's remote, so they would need 5 million ounces plus to be deadly. Maybe more. If the grade is like 0.7, they might need 10 million ounces. I don't know, but it's like so it's kind of binary in that case. It's like Snowline. Why I was so bullish on Snowline is that hey, I think there's a very good chance that they will pass the threshold where this is actually good enough that despite the remote location, it would be worth it to build a mine. And that's what obviously it appears that B2 Gold is saying as well, because they just invested in Snowline. I don't know exactly what the threshold is for Tectonic. We don't know the exact blue sky scenario. Nobody knows, but we know there's 4 kilometers of strike to test, and we know pretty much every drill hole has hit so far. So if they just find a huge semi-low grade deposit like 10 million ounces plus with good metallurgy, maybe that could be worth a couple of billions. Blue sky again would be obviously beyond that. We only know what we're risking. Okay, let's say market cap is 30 million. If they find absolutely nothing there, let's just assume it's like 70% downside. Okay, 70% downside. Compared to, it's like, let's say success is at least 1 billion and it's open-ended. You got to multiply 30 million a few times to get to 1 billion. So that's the upside. That's the reward part of the risk reward. The risk is always theoretically 100% down. But it's the upside that's supposed to be large enough that the bet makes sense. And if it's pricing in just a 3% chance of success of flat gold having something that will one day be worth 1 billion, I think that's too low. Anyway, Western Alaska, I think it's absolutely one of the best, especially silver bets out there. I just used 35% chance of finding something that's like Silvercrest like. Silvercrest is I think they're operating now, last I checked it was around 1.2 billion. They have perhaps an entire CRD district untouched plus porphyry potential, and they have another project in the vicinity which might be another CRD type system if I remember correctly. So I'm just using, and they might need 1 kilometer of strike or something to reach a Silvercrest type deposit with the grades etc. they've been hitting. They have already drilled up 400 meters. So let's say if they double that size, if they just double the 400 meters they've hit, they would be close to let's say deposit that could be worth like $1 billion. So I put even a 35% chance, which I don't think is a long shot, and of course it could be much more than 1 billion as well. So if you cap the blue sky at 1 billion and assume there's at least, you know, a 35% chance of reaching 1 billion given what we see out there. Yes, you know, 65% chance of failure or risk of failure. So I don't think 35% chance of success is, you know, absurdly high, but in that case that's still like 350 million in risk adjusted fair value today. And that's with a capped blue sky. And okay, these should be 100% less actually. So this should be 278. This should be 658. Still, yeah, 278% undervalued. This might sound crazy, but that's what happens. Okay, my computer is a bit slow right now. Oh, I'm even in the wrong. Okay, went to the wrong slide. Anyway, I mean that's the kind of undervaluation you get at around these levels. It just becomes crazy. The bets just become crazy. Like even in a, you know, high risk, high reward stories, they can still be 200, 300, 400% undervalued. And then lastly, Brixton Metals. Yeah, I mean, I where do I have that? Okay, I haven't done any. I haven't written that down here, I guess. Anyway, Brixton Metals, 1 BHP size target. And for BHP, I used 2 billion as a capped and fixed blue sky scenario. If we assume that's 200%, well, 20% chance of a BHP size price at 2 billion, that's 200 million already. And then you add Trapper, and then you add Hog Heaven, and then you add a bunch of other stuff. So I got that up to 315. I think I actually got more than that, but let's say it's 315, sum of the parts risk adjusted. It's trading at 61 million right now. I think they have 17 million in cash. So that's 44 million in enterprise value. And I think there's a good case for the sum of the parts risk adjusted value, even if you're quite conservative, to at least be like 315 million. Yes, you know, 417% undervalued. And that's what I mean, that's partly because, like we know, share structure isn't great. It hit overhead like resistance, which got traders to sell and all that. So there's a bunch of reasons on top of the poor sentiment that leads to these kind of valuations. And of course, I mean, remember, like if we're seeing record low volumes, meaning like record low interest, and a lot of the markets have been tanking, and miners especially, for quite some time now, you better believe there's probably redemptions in precious metal funds. So who knows who are selling these? It might be your neighbor who called up a precious metal fund and it's like, hey, get me out of this sector. Everybody's saying it's going to go lower forever or whatever. Okay, so they want their they want money, which forces these poor funds to sell when they probably know that they should be buying hand over fist. So it's like, I don't trust the market at all. I personally feel like anybody that is selling any high quality juniors right now are absolute morons unless they are literally forced to sell them. That's my 2 cents. So when I consider this, and again this, on balance, I would say pretty conservative assumptions of chance of success and blue sky, and it's not really counting in a superb, sentiment environment or a higher metal price, etc. There is so much risk-adjusted money spilling all over the table. And you can't really look, it's like, yeah, okay, you look at another stock you haven't really checked up on. It's like, okay, another no-brainer. Even this is pricing in like the project is total shit. So it's like, if there's even a small chance that Redpine might have something that could become a legit gold mine. It's not pricing in anywhere close to that. It's like the enterprise value might, what was it, like 12? What did I say? It's like, let's say 12.5 million enterprise value. It's just ridiculous. Pricing in 1/10 of a mine worth 125 million. 1/10. And a legit mine would probably, let's say a multi-million ounce mine, who knows, several hundred of millions. So it's just, you can be so conservative at times like this, and they're still like kind of screaming at you. It's like, oh my God, the marginal investor right now is absolutely bonkers. So this is the kind of minus 100, reduce it by 100% in these. For some reason I just put in percentage and it immediately or automatically calculated it, even though it's like, yes, this is more 590% to reach 39. But still it automatically turned it to percentage, even though we're talking about upside. But still, hope you get the point. This gets me so ridiculously bullish that it's like, I almost feel paranoid. But there is no competition out there. Headwater Gold, 1,400 shares. Inflection, 7,000. Magna had pretty low volume for a big part of the day. I have no idea who the hell is selling Magna. Well, I have no idea who might be selling any of these, and I have absolutely less of an idea that more people don't see these as screaming buys. These kind of bets, it boggles my mind that, people might be aware of the mining sector and Bitcoin because there's a few who like both. I wouldn't have I don't know how, well, if I love Bitcoin, I might have some, but it's like, there is no way on God's green earth that Bitcoin comes even close to the risk reward presented in the junior mining sector right now, which is also a critical sector. Or in the case of gold, an increasingly a commodity with increasing demand and has the longest history of any commodity almost. Well, it's as a financial asset, like thousands of years. It's just absolutely bonkers. And to me, this is like we're literally printing future money right now. So if I didn't want to buy an apartment relatively soon, I would have no problems of getting if they froze these prices, they went nowhere in 6 months. I would expect that any money I invested in this sector on average is going to net me 400% someday in the future, within like 3 years. I don't remember the last time I was this bullish. And if these fall in price even more, again, it doesn't take too much for these to fall in price to add another 100% on top of the, upside to fair value. The bets get exponentially better. The risk reward just goes insane at times like this. It's just absolutely crazy. This is why I don't miss poker at all. You never ever had bets that came even close to these. Pair of aces don't even come close to the kind of hands you can get in this sector at these prices. Anyway, long rant. Assume I own shares of all companies mentioned. Quite a few, I think, are banner sponsors. So consider me biased. Don't invest money you cannot afford to lose. And again, remember, it's like this might be the upside to fair value according to my guesstimation, but that does not mean that, yes, there's a guarantee that like Condor will go up 685%. In reality, it might be either 50% or plus 1000%. The same goes for all of these other ones. So that's why I have them as a basket. It's like if these are somewhat correct on average, but let's say the chance of success is still like only 10%. I think it's much more than that, especially when you factor in that as soon as this sector turns, without any real fundamental improvement, these are going to go up possibly several hundreds of percent in price anyway. So you have that as a tailwind without even, without the fundamental stuff needing to really, the case doesn't really need to, hit blue sky for these to go up several hundreds of percent just from a change in sentiment. But again, let's be super conservative. Let's not even really bank on that. But I would still, again, diversify away the risk. Because if there's like an 80% chance of a permanent loss, let's say, in either one of these, if you invest in two, there's only a 64% chance that you will have, well, let's say, two fails in a row. If you have three with 80%, then you're down to a coin flip. If you have up to 7, you're down to 32. 8, you're down to 26 chance of total failure. 9, down to 20%. And with 10, you're down to 17%. And what makes it even better is that even if the ones that don't hit blue sky, etc., many of these are already so cheap and might have so many projects on, in the pipeline or whatever, that they might not go down too much. Well, not stay down. Yes, they can fall like 40-50% on a given day, so 40-50% downside. But that still might get a 100% re-rate just when the market turns. So that's probably, in many cases, that's not even a permanent loss anyway. But again, it's like you don't get to play hands like this in poker. Anyway, don't invest money you cannot afford to lose. Don't invest money you need and all of that. Not investing advice. Bye.